Hi traders, in this video we are going to be taking a look at the average true range indicator, or the ATR indicator as it's commonly known. So this indicator, as you can see here on my chart in the MT4 platform, this is a Euro dollar 1 hour chart. What this indicator does is tell you the volatility in the market. So why do you want to know what the volatility is like? That's because you can determine if you're going to be trading in a trending market or a ranging market. Well, that's how I like to interpret it myself. So basically, if the ATR is low, I've marked here the levels for the ATR. On the 1 hour chart, I use 0.001 and 0.002 just to gauge for medium volatility. Would be this level here. There's the 0.001. Anything below that I consider to be low volatility. Anything above medium and anything above the 0.02 says high volatility. You can obviously adjust according to your own preferences. So if it is below the 0.01, the ATR, I consider the market to be ranging. So for example here, if we just mark where it is below, between here and here, you can see low volatility and the market is indeed ranging. So I don't use the ATR for entries or exits. It will just help me determine if I'm going to be looking to trade a range or if there is enough volatility for trends to be gathering momentum. Okay, so within this range you could be looking to buy the bottom, sell the top. For example, here to here, here to here. You could simply mark the high and the low like so. Probably use around there. We're going to use previous level of resistance and support. And you could look to sell here, buy here, sell here, buy here, and so on. Okay, so that's basically using the ATR to help you determine if we're in a range or if there's enough volatility for a trend trade. And as we can see, when this trend happened here, the ATR went above this level. You don't necessarily have to use that level. You can just look at the indicator and see going upwards, upwards, upwards. There's increased volatility. Have your divergence to the upside there. Divergence to the upside there. You can see that the volatility is increasing. As I said, you don't necessarily need to use the 0.01 level. You can still see good movements below, as we've got here. If we take the 0.02 level, I mean, you can see the volatility there is a lot higher. I personally would prefer to avoid trading around conditions such as these, just because the unpredictability of the markets. So the ATR can be used as a filter for avoiding trades, as well as deciding if you should take trades with a trend or within a range. If you're trading within the range, you can look for indicators to help you decide which trades to take. For example, a stochastic oscillator, the crossover there for buy trades and the crossover there for sell trades. Okay, so when the main line crosses the signal line up, signals a potential buy trade. When the main line crosses the signal line down, potential sell trade. Ideally for buys, you want the stochastic to be in and around the 20 level, and for sell trades, you want it to be in and around the 80 level. This is because 80 and above is considered overbought, 20 and below is considered oversold. Okay. In terms of trend trading, the ATR can be good for looking for pullbacks. Basically, it's good to get into a trend when price has a pullback, so you can buy in at a good price. For example, you don't want, when the volatility is high, necessarily to buy up here. I mean, the spinning top, bearish spinning top candlestick pattern probably would have told you that wasn't a good idea, not to mention prices already rallied up that much. However, as price fell and came back towards the trend line, let me just extend that there. Okay, go back up. I'll get there eventually. There we go. As price came back towards the trend line and the volatility was low, we might have thought about waiting for a good opportunity to get in on this trend, perhaps on a breakout. Or again, you can use the stochastic oscillator. Let's just mark off the crossover there. Okay, so you have the crossover in the oversold zone. Potential entry opportunity there. Even as the trend continues, you have another crossover there. Low volatility. You can mark your trend line here. Just because it looks like we're far away from the trend line here, but there is another one there. Resistance, you can mark resistance, a breakout of the resistance line there. You can see good movement. So the ATR really, it is good to help filter. I personally don't use it for entry or exit signals. I don't think that's what it's for. The main thing I would use it for is just to avoid trading when there's too much volatility, perhaps around news releases. Again, here it's high. It doesn't have to be, as I said, these levels. I just use them as a rough guide. But anything above 0.02 on a 14 period ATR on the 1 hour chart, I consider volatile. And I'm not looking to get whipsawed in and out of the markets. It's just too unpredictable. But if you're a range trader and you're just looking to pick a few pips here and there, it can be a good indicator for identifying market ranges. So we just mark off between there on the ATR, there on the ATR. There's a few opportunities, maybe that should come along here. A few opportunities within there to sell, to buy, to sell. But you'd have to use other indicators, candlestick patterns, price action analysis, as always, resistance and support to time your entry. You can use Bollinger Bands as well. It's quite good for range in markets. If you sell when price breaks out the upper band and buy when it breaks out below the lower band. Wait for the candle to close for confirmation. Here, spinning top candlestick pattern. Good trade there. Up here, candle closes outside. Have an inverted hammer. So yeah, loads of market incision. You could have sold there. ATR is still saying there's low volatility, so ATR is good in range in markets for picking tops and bottoms in combination with other indicators. You can choose from any indicator that you prefer using, and also good for avoiding over volatile markets. Again, to reiterate here. As always, make sure you've got good money management. I like to cut losing trades short and let winning trades run with a good favorable risk to reward ratio. Yeah, hopefully you found it useful. You have an idea of how the ATR can be used as a filter of when and when not to trade. Thank you for watching. Please like and subscribe for more.